Today on Forbes, why one-time cannabis darling Tilray is now high on beer. In July 2018, Tilray, the Canadian-based cannabis company, went public on the Nasdaq, becoming one of the first weed firms to list on a big US exchange. On its first day of trading, shares jumped 35%, and Tilray became the first beloved pot stock. A few months later, Tilray hit $214 per share, valuing the startup, which had $27.7 million in revenue at the time, at $17 billion, an all-time high. But shares have been in a painful decline ever since. After 7 years of no meaningful movement at the federal level to legalize marijuana in America and brutal competition in Canada's small cannabis market, Tilray's stock price has now dropped below $1, recently trading at 49 cents. Last month, the Nasdaq sent the company a warning that it could be delisted. Irwin Simon, who became CEO of Tilray in 2021 after the company merged with another Canadian cannabis company, Aphria, which he was CEO of at the time, is well aware that his company's stock price is in the toilet, and he believes he has a plan to fix it. Simon, who oversaw Tilray's acquisition of more than a dozen craft beer and spirits brands over the last few years, says he is, quote, not nervous about getting delisted because he expects shareholders to approve a reverse stock split in July, which would bring the share price over $1 again. Simon, who founded Hain Celestial Group in 1993, an organic food company he took public and grew into a $3 billion in annual sales business, oversaw the merger of Aphria and Tilray 4 years ago. The deal, which valued the combined company at nearly $4 billion, was structured as a reverse acquisition of Tilray. Each Aphria shareholder received approximately 0.8 Tilray shares, worth $6.20 at the time, for each Aphria share they owned. Despite its market woes, Tilray remains one of the biggest cannabis producers in the world, growing about 170 metric tons of marijuana each year, which is sold across 20 countries from Canada to Europe to Australia. It cannot sell marijuana in the US due to federal law. After acquiring 8 craft beer companies from Anheuser-Busch and 4 from Molson Coors, it is also now the 4th largest craft brewer in the US, with regional brands that include New York's Montauk Brewing, Georgia's Sweetwater, and Colorado's Breckenridge Brewery. Tilray also owns Colorado-based blended bourbon whiskey maker Breckenridge Distillery. Overall, revenues were $788 million last year, but Tilray somehow managed to lose $222 million, albeit mostly due to non-cash expenses. Although the company is losing heaps of money, it has $230 million in cash and has trimmed its losses from a staggering $1.4 billion in 2023. Thanks to Simon's string of acquisitions, a strategy he says is due to his fear of being a, quote, one-trick pony, Tilray is no longer just a cannabis company. He cringes at the word weed and points to Tilray's $80 million in annual sales medical marijuana business. Tilray sells a total of $275 million of cannabis when recreational sales are included. He wants investors to believe that the brand, which derives 60% of its revenue from selling cannabis and beer, is really a diversified pharmaceutical and consumer packaged goods company with a focus on, quote, bringing people together for a good time. Last year, 35% of Tilray's revenue came from marijuana, while 25% came from its alcohol division. Tilray also operates a pharmaceutical distribution business in Europe, which delivers its medical cannabis as well as other medications to pharmacies, and is responsible for 33% of its revenue. The company's wellness division features hemp-based food brands like Manitoba Harvest and brings in about 7% of the company's revenue. Pivoting to alcohol has helped diversify Tilray's revenue, but ironically, legal weed has been hurting beer sales in the US. According to the Brewers Association, craft beer production decreased 4% in 2024 over the prior year, the 3rd consecutive decline as consumer preferences continue to change. Simon concedes, quote, cannabis does ultimately cannibalize alcohol sales. If I get cannibalized on one end, I want to be in the business that's cannibalizing. For full coverage, check out Will Yakowitz's piece on forbes.com.